Good day. This is the Elliott Wave weekly update for the S&P 500, being recorded on Saturday, November the 23rd, 2024. I am going to start with the cash market, and I am going to do a quick overview off of the 3-year weekly chart. And the largest degree that I'm counting that's being shown is the primary degree, and that would be a primary fifth wave up, which began in October of 2022. The primary degree above this primary five would be a cycle third wave. And those that have been following me long enough remember that I had originally had counted cycle wave three complete at the January 2022 highs and ran it as a cycle fourth wave correction, and that the A wave, which is now marked primary four, would have been the primary A wave of that cycle four. But being that the primary B wave blew out all the numbers on the way up, it fell back to the alternate, which of course was that high in January of 2022 was actually primary wave three, not cycle. So I brought it down a degree, and that's where we sit now. And now we're following through to the upside and are getting towards the upper end of this primary fifth wave. What'll be inside that primary fifth wave are 5 waves of intermediate degree, of which 1 and 2 are complete. And we're looking for, or we're getting close to, the completion point for intermediate wave 3. And that will then, of course, lead to an intermediate fourth wave decline. And as those who know, who also have been following me for a while, that Elliott taught us that a fourth wave correction will find its terminus within the price territory, normally towards the terminus or the end point of the fourth wave of 1 lesser degree, being that we'll be in an intermediate fourth, which is labeled here in the yellow. We'd be looking for that low to come in at the end point of the fourth wave of minor degree. And that level happens to be just about 5,100. So no matter how high we get, whether that be 6128 or 6250 or 6350, that the market will be expected to drop back down to this area of the previous fourth wave. So that's what we're looking forward to on the outside. And then once that is complete, again, once intermediate wave 4 is in, then we're looking for an intermediate fifth wave up again to new all-time highs, and to wherever this third will end, we would be looking for the fifth wave to go above it. And then that would then complete the primary fifth wave, and then the intermediate, the cycle third wave. And we'll be looking for that much larger cycle degree fourth wave correction. Now, in terms of timing, I've been talking about how we've got a bunch of powder kegs still very active, sitting dormant right now, but it's not going to take much to ignite any of them. And that could be the Ukraine situation with Russia, that's Israel versus Iran. That's, even we can include something coming from China that could just really disrupt the US markets. And each one would carry its own version of what would get disrupted in terms of, what's going to drive the market down. And so my thought is that we'll get this intermediate wave 4 in, and it may look very, very similar and move in as quickly as that minor fourth wave, which again is right here. So let me just come down quickly to the daily chart. We can see a little bit better. This fourth wave, this of course was the July 16th high, and this was the August 5th low. So that basically was a period of maybe 3 weeks. So, and that was very quick. And in fact, the C wave took all of 3 days to unfold. Now, if we get into a situation that would produce that same type of a jarring slam dunk here, and it would be on an intermediate 4, of course, it would be larger. But again, this is the November 11th high. So we're kind of a little bit inside, but within that same type of a time frame. So, but let's just say it took 3 weeks. We could be down here by mid-December and then start that intermediate fourth wave up, which could be due to many different factors. And then once we got all the way up there, what could kindly spill it over and cause it to puke once again? Well, could be the fact that we have an incoming president who is bound and determined to put 200% tariffs out there and to disrupt the DC, Washington, DC government environment, definitively going after all kinds of different things. So again, it's all going to determine on who actually gets through the Senate confirmation process to hold these very important cabinet positions within the incoming administration. So not going to put a word out and just what I think or anything on that matter, because I think that's not up to me. It's just, I'm not even going to comment on it. We have to wait and see. Now, but what we can, and I do keep a very close eye on, are these powder kegs, are the developments that we're seeing. Is it just saber rattling, or is there something seriously afoot? And if we're looking at the Russia-Ukraine problem, right, the war, then we know that Russia has used ICBM or their new stealth missiles and firing them into the Ukraine, and continues to warn the West on their involvement, which is a whole different situation. Again, I'm not going to comment on who or what has an advantage or no advantage or what's going on there. It is just, I think, a tragic situation. And it holds a lot of danger to the Western economies, to the Western alliance, to a nuclear disaster happening within the Ukraine. And that could come in the manner of that there's still that nuclear plant, which is understaffed and could go into a meltdown, or some bomb hit it and shove it into a meltdown and cause a major nuclear disaster that would demand immediate attention and action and could disrupt the markets. Got to say, it could. Any escalation there with the use of nuclear weapons would escalate that battle. We've already seen where North Korea is providing soldiers to the Russians and moving them to the Russian front with the Ukraine to fight in battle. So in essence, the definition of a world war may have already been met. And that we have another country stepping into a war that was declared by Russia. So I've not heard anything official that North Korea is declaring war on the Western alliance or even on the Ukraine. But it's a fine line that's being walked there. We continue to have Iran, Israel, and Iran is promising to retaliate against Israel for its missile attack on Tehran and Iran, the different sites there, and to do it before the current administration gets into office. So that doesn't leave us a whole lot of time there. So it's a powder keg still sitting there. And in the meantime, Israel is continuing to decimate Gaza, decimate parts of Lebanon, particularly around Beirut, in their campaign to wipe out their enemies, which is Hezbollah and Hamas. Whether you believe it's right or wrong has no difference, and I'm not taking any side here, so please don't misunderstand what I'm saying. I'm just keeping an eye on that powder keg and realizing that there's internalized areas that are producing some serious humanitarian problems. Now, how do we want to fit that all in? Well, we can't. We can look at possibilities of what one might do. So it's sort of the same thing. If I had to count this out, I'm continuing to look for, right? Because in absence of a powder keg erupting or some serious development along the way that would create an atmosphere where the markets have to react. Right now, we're still in that observing type of an atmosphere. So what really do we do in lieu of that? Well, we continue to trade. We continue to do and run within our own economy and economic conditions and plan for what's coming possibly in the future without including the potential of a world war, the potential of a nuclear disaster, the potential of a lot of things that could start and happen that would affect us. So what I do tend to see is that we are moving forward. We just got through a pretty heavy duty earnings season. We still continue to move through our weekly expirations and all of the gyrations, and as money and capital is getting shifted and moved around, we're continuing to see that as funds and everybody else starts preparing for year end, which now is going to be about a month away as of next week. Next week we have the Thanksgiving Day holiday, and then we're into the 1st of December by the time that holiday is over and we get back into trading the following week. So a lot of things continue to progress. And that is basically how I'm also just approaching the market. I take it day by day and I go in and I use the opportunity that I see happening in front of me, whether it's bullish or bearish, makes no difference. Again, as a day trader, I can do that. I have that option either to not trade at all if the markets are going to be untradeable, but that's not necessarily been the case. We have seen opportunities, usually within the first hour and a half to 2 hours of trade. We get plenty of opportunity to trade both directions, but I can see how it is presenting somewhat of a problem for position traders who may be continually look for a stronger move up, or they're starting to position themselves for a stronger move down. Either way, they're doing a balancing act here. Also, for swing traders, I think that there's been some good opportunities. And if you're nimble and you can get in there and you can do it, that you should be making some money. So again, it's business as usual, so to speak, that we go in, we do what we do, and then we just continue to monitor our own political situation and, of course, the global hotspots. So with that in mind, again, I believe that we are still working our way higher in a minor fifth wave up, and that minor fifth wave is then going to complete intermediate wave 3. So within minor 5, we have 5 waves of minute degree, and here's where I made a change. So over the weekend thus far, so between yesterday and today, I deconstructed and reconstructed these charts. So in many different ways, and finally decided and came upon where I believe that high, the August 11th high, was the completion point for the minute wave 3. I know prior to that, I'd put wave 3 here and 4 here, and this was minuet wave 1 of minute wave 5. But the problem came in, it's like, yep, that was a nice rally up, no doubt. And it was contributed to a post-Trump win, the Trump election win. And so, but then we declined. And while the S&P is moving a little bit cleaner back up to the upside, I still am looking at this a little bit differently in terms of I'm now looking at it as being the completion point for that minute wave 3. And what that does then is there is a possibility that it still could be more of a diagonal, but I'm kind of counting it just as a straight 5 waves up. Over in the NASDAQ, a little bit different. Here in the S&P, possible, it is possible, but I'm not showing it as that having that potential right now. We'll wait and we'll see how this all begins to play out. So this is the daily chart. So we have 1, 2, 3, looking for a completion of this minute 4th wave, which again, prior was a minuet wave 2. And as I bring it down and then put it, say, like on the 4-hour chart, and we open it up so we can look inside what's going on, this, as it was as far as minuet wave 2, fit a little bit cleaner in the S&P, I will say, than in the NASDAQ, but it still was not making me jump for joy with this. Now, the rally that we got towards the end of the week and then Friday was more in line with what we might want to look for. So, but it would have to be 1, 2. And even if I break this down and we bring it down to the hourly chart, we're starting to see, well, that's a 3. There is a 3. There is a 3. And then we get a 5. So really, what does it really look like to me? Like an A, and this is going to be all a B wave. So in other words, this minute wave 3, we're working on a minute wave 4. So this is minuet wave A, minuet wave B, maybe complete or nearly so. And we still have a minuet C wave to come down and then put in a minute wave 4, race up again, hopefully in more of this type of a rally, right? Where we get that strength in the rise versus this chop rise, which would be more conducive for an impulse move. These internally, now going inside that in our chart, I can find impulse type moves, but not on an hourly chart. That's what I'd be looking for to put a firmer base here that this low is going to produce the new all-time highs and finish that larger move. I'm still going to be looking for that, but right now it does appear that we're going to need that downside first. Now, the other side of this coin, the other side would be, I can leave that as a 3, and I can work this to be an ABC, no doubt, and put that 4 up here. And then this, if it proves itself to be impulsive, and one thing would be is that it gets above 6,017 or 6,018. If it starts moving strongly above that level, well, then that 4 is going to go over here, and we're working that 5th wave up, and we're closer than we thought. So upside, well, first of all, we still have for intermediate wave 3, 6128. So again, here we are going to go up, and we're going to start knocking on the JP Morgan collar, which I believe still sits at 6,055 on the call side. So with that in mind, are we now going to go up and give that a test, or are we going to go up and push right on through it before the end of December? So that's the other key factor that we got going on. This timing now is all going to be very, very important. Of course, if you're that JP Morgan trader or the desk that trades that, you're going to be paying very close attention. I don't worry about it, to be honest with you, and I don't really even consider it, because I feel that those traders that are in charge of that collar or that type of trading that they do for JP Morgan, they are, in my book, extremely good at what they do, and that they'd be able to trade that position effectively for JP Morgan and working it up to that December 31st expiration, where they would do their next roll, and then it would roll out to March. So that's the whole purpose, that they're hedging their portfolio, their hedge fund portfolio, or one of them, or a large one at that. And so they roll it out once a quarter. So it rolls from March to June to September to December. And now, so we're sitting in that December position, and it may get challenged on the call side. Now, if we go down and put in this minute wave 4, depending on how long it takes us to get down there, and maybe it only takes a day or two, to be honest with you, and then we still start to rise, and that continues to push it out into December, and where I really then would be looking for it to put a challenge to the call side of that JP Morgan collar. In the meantime, there's where resistance level sits, 6128. That's for intermediate wave 4, intermediate wave 3. Above that level, and this would be for minute wave 5, and then again another intermediate level above all that. But you can see they space out. Once we start to get further above 6,000, because we've never been here before, it starts to really just space itself out. So if and when it does occur, it could move very quickly, because we don't have anything to stop it. In other words, there's no resistance up here to stop it, because it's never been here before. So we're going to be relying on Fibonacci levels, and once one's broken, well, that opens up the next one. So again, on an intermediate degree, we have 6128 and then 6344. 6350 up in here. On the minor degree, we have 6250 basically, and then way up here. So I'm not necessarily looking for all of this way up here under current circumstances within our own economy, within the incoming administration, and within the global geopolitical situations going on. Unless there's peace on earth, then I would not be looking for this. And to be honest with you, I don't know how hard I'd be looking at these levels. This one, I think, can come into play. So that is in the SPX. Going back out to the daily, so we can look at those moving averages, and they really are not doing that bad. In fact, when we look at them, there's the daily on the SPX, there's the 8 turning higher, there's the 20 turning higher, there's the 50 continuing to move higher. Never even gave us a wrinkle when we did that little plow down. You can see just continue to move higher, and the 200 just nonstop, just trajectory on an upward slope. So that tells us that this 4 might go right there, and we just end up going right above 6,017 and start heading up to finish minute wave 5. Okay, let's go over and take a look at the ES. It's basically the same story, but let me come down to that 4-hour chart because you're seeing those trend lines. And what I did kind of put in there is that we might, I'll have to go down. Let me go down one more. Before I do that, just to kind of go 1, 2, there's the 3, here's the A I'm looking for, and then we got a B wave. And that C of B might be a diagonal. And that's what this is indicating. So you're seeing that the slope is very steep, but it would go up and then come tumbling back down. So if it was a diagonal for wave C of B, so this is A of 4, and this is B of 4, and this would be the C of 4. And there's a possibility, let me go all the way down to the 15-minute so we can see it. There's that possibility that it is putting in a somewhat of a diagonal. And that's because we had all these sideways and these jumping in crazy moves all the way in it. So it just could be 3s, bunch of 3s, and now we're doing that 5. So that remains in the picture. Now I'm going to come back out to that 4-hour chart and bring it down just a little bit. And we can see there's the 3 looking for the completion of 4, which may be in. Otherwise, we're looking for this B wave to complete. Market to come back down here are our markers for a 4th wave. And so we're going to go expanding it to include the entire minute wave 3. And so 3A2 is 58, 26, 27. And then 50% is 57.50. Now, 57.50 remains a very important support level and has been. So we have 5,900, 58.50, 5,800, 57.50. So doing it about every 50 points. But 57.50 has been kind of in the purview for some time. And so I would imagine we can get back down there, and it remains a fairly strong support area for the rally. A break would start to turn that overall picture back over to a more negative feel if it should occur. So right now, still looking for minute wave 5 to get up and complete. We're looking for the completion point for minute wave 4. If it already is, then we're inside of minute wave 5. And that in and of itself could be unfolding. And this is 1, this could be 2, and that we're getting into a 3rd. Not really have seen them quite that fashion. But if we had to make it and move it into some form of a diagonal for this, if we're putting up the minute 4 here, then minute wave 5 possibly working in and of itself as a diagonal. So we'll see. We'll just see the formations and the fact that they're a bunch of 3s. So, and we know that with a diagonal triangle, it's going to show 5 waves, but each one is going to be 3. Okay, so that is actually going to be it for today. And the next daily update will be on Monday, November the 25th.